Hello and welcome to Market Fatafat with me, Ankita Saxena, and with me is my co-anchor Vinny Motiwala. Vinny, what a bounce back Nifty saw from the 19,600 levels. It is flirting with 19,700 now. It's already touched 19,700.
Absolutely, surely keeping an eye out on that, finally again above that mark of 19,700. But will that sustain is obviously the question everyone watches out for. But Nifty as of now holding on to gains of 0.3% in trade. Sensex 2 trading and recovering similar lines as well, 0.3%, almost 0.3 to 0.4% trade that we are seeing a jump up. Even at the Sensex as well, considerably recovered from the day's lowest point as well. When you look at it, yes, in the morning trade it opened up in the red, and then look at the recovery that's come up. And obviously Sensex 2 trading right now at 66,000, around the 66,400 levels. Let's also look at what is doing well today in trade as well. We have metals that have continued to shine, and Nifty metal is trading with gains of almost 1.4% as of now. Nifty energy, Nifty IT, all these are among the top sectoral gainers. What's not doing well today is the FMCG pack, that's down 0.7% in trade, while Nifty pharma is almost flip-flopping between the red and the green, almost flattish as of now is what we're seeing the Nifty pharma. Nifty Bank too holding on to gains of 0.3% in trade, and mid-cap and the small-cap space, that is something that has been outperforming the benchmark indices. So very interesting how the markets are looking like, but let's bring on board and get started with all the stocks that are buzzing in trade, either on the back of news flows or on the back of technicals as well. And on the technicals, today we are joined by Sameet Chavan, while from the research team, we have Shesha as well as Vamakshi joining in with us as well. A very good afternoon to all three of you all. Good afternoon to you as well, Ankita. And as always, I'm going to be starting with the first stock that is in focus, and let's talk about Marico. They come out with their numbers late Friday evening. When you look at the numbers, overall was an inline set of numbers that came in from the company. Nothing exciting that, because what we saw was that the revenue of the company saw a decline of around 3.2%. Domestic value growth also was seeing a decline as well. And when you look at the revenues, that came in at around 2,477 crores. Profits of the company up by 16%. And as well as when you look at it in terms of the EBITDA performance of the company, that's seen a bit of an expansion there as well, 250 basis point expansion in terms of the EBITDA of the company. EBITDA margins of the company. Now, key highlights that we saw on the con call, and what the management has actually done is they've upped their guidance and revised the guidance for the margins by 100 basis point in terms of FY24 of what they're expecting. So that is something to watch out for. They said that they're confident of crossing the 20% EBITDA margins in FY24. Gross margins also, they expect that to expand as well, and Q3, Q4 will be better in terms of margins, and overall second half of the year, they were expecting much better performance in terms of value growth, volume growth as well, is what they're expecting coming in there as well. So all in all, they've retained the revenue growth of around 13 to 15% in the medium term as well. So let's keep an eye out on Marico. As of now, down and out in trade, nothing exciting over there as well, and keeping an eye out on Marico.
Alright then, moving on to the next stock that is in focus today is Pyramid Enterprises. It's down almost 5.5%. It had slipped to 8.2%, the steepest intraday decline since November 2022. Now, that is primarily on the back of the fact that they had reported a 93% decline in the June quarter consolidated profits that came in on Friday. Now, the company has, though, benefited, from an exceptional item of 76 billion rupees a year ago on the back of the demerger of a pharma undertaking. But the company has, finally approved a buyback worth 17.5 billion rupees, and added that its backers expressed their intention not to participate in the buyback. And on the back of this news flow, Pyramid Enterprises will be in focus today.
Absolutely. Also, let's go across and listen in to what Ajay Piramal himself had to say as well, and what he believes is expected from the company going forward in terms of the balance sheet of the company, the growth outlook as well. Listen in.
We had said that we would bring retail to wholesale ratio 2/3, 1/3. And we were going to do that in about by 26, FY26, FY27. I think we will do it much faster than that, because as you can say, the retail is growing pretty rapidly. This quarter compared to the same quarter last year, we have grown our retail by 57%. And the trend continues for growing our retail. We have announced a buyback of at the 25% premium to the closing date of the buyback, when the buyback announcement was made. And for that, before that, our debt equity ratio was only 1.1 or 1.2, sorry. Now it will get to about 1.3 times debt equity. So it's a very strong balance sheet.
Right, Samit, coming to you, Shriram Finance is another stock that is in focus. You know, in the last 6 months, it has already given an up move of 45%. What is the headroom for growth here, and what are the charts saying for this particular counter?
See, this stock has given, a stellar move of late. If you see its recent performance, stock moved from the levels of 1350. There was a steep rally, which was followed by some consolidation in last 3 to 4 weeks. But again, since morning, we are seeing good, buying traction in this counter. Stock is on the verge of yet another breakout from its, recent hurdles of 1870. So, considering the overall price and volume activity, we expect this stock to continue its northward move. 1950, 1980, these are the next levels to watch out for as far as Shriram Finance is concerned. And on the lower side now, there's strong base that has been formed around 1800 to 750. So any decline is likely to get bought into, and over the next few weeks, we expect this stock heading towards 1950, 1980 levels.
Okay, keeping an eye out on those levels for Shriram Finance. But let's move on and talk about Power Mech. And Vamakshi, why have you picked out this one for us today? What's the news flow?
Well, Vinny, this stock is in focus on the back of an announcement that the company has won a massive order. Now, the company has bagged a mine and development operational project from sale, and this is for an estimated value of almost 30,438 odd crores. The management says that the project will further strengthen their robust order book. It will also enable the company to diversify its order book, which is in line with their strategy to have an optimum mix between power as well as non-power segments. The revenue booking could be started by FY24 itself is what the management has highlighted, and in fact this project can add a peak turnover of almost 1,200 crores plus escalation annually. So all in all, this does look like a positive announcement for Power Mech, and as a result you can see that the stock is trading higher today. The stock as of now is trading with gains of over 9% as we speak.
Alright, moving on then. Shresha, 5-star is another stock that is buzzing in trade. Now, I believe it's coming on the back of some guidance, the revised guidance. Do tell us what is the news flow on this counter?
Well, yes, good set of numbers. They've gone ahead and revised their guidance upwards, which is why the stock hit intraday high in today's trading session. But nonetheless, it is off the highest point of the day and now sitting at the lowest point of the day as we speak. As far as numbers are concerned, disbursements nearly doubled on a year-on-year basis. Interest income saw an uptick of about 39%. Calculated net interest income saw an uptick of 36%, and PAT also rose nearly 32%. As far as guidance is concerned, they've revised its 3-year growth guidance to a CAGR of 35% versus their earlier guidance of 30%. They also say that management has stated that earnings growth will be in line with their loan growth, and they anticipate maintaining leverage of about 4.5 to 5 times, and ROE is expected to exceed 20%. So yes, very good set of numbers, and guidance has also been revised upwards, which is why the stock is in focus today.
Absolutely, keeping an eye out on 5-star business. But let's move on and talk about Bandhan Bank on the charts. And Sameet, this one has been in the longest period of, like you could say, consolidation, nothing in terms of return. What is it that one should start viewing now? Last 1 week seems like some bit of a green has actually come in here. What is your view now?
Obviously, the trend has been downwards. Stock has been declining from the levels of 270 without any major respite. But around 210, it seems that the fall has been arrested. Stock is in the form of, stock is in the process of forming its base around 210. And since morning, we are seeing good traction. So it's an early sign of revival. Yes, obviously, the major trend remains downwards, but you never know if this stock manages to surpass 235. We could see a good trend reversal on short-term charts, and then probably this stock can head toward 250, 255. Overall, this has been laggard, but it is now showing some promising signs, some early signs of revival. So keep a close, watch on 230, 235. Once this stock surpasses and gives a breakout beyond this, then yes, the tide might turn upward for this particular counter, and then 250, 260 levels can be tested in the near term.
Okay, keeping an eye out on those levels for Bandhan Bank. But let's move on and talk about DCB Bank on the back of its numbers. Now, this stock actually today slipped as much as 5% in trade at one point of time as you look at it. As of now, it's trading with declines of 4%. Now, what happened and why is the main fall coming in is because the slippages have risen as well as the NIMs of the company that has seen a decline. Now, net interest margins also that has come in between 3.5 to 3.75 is the guidance what the company has given. Now, when you look at it in terms of numbers that have come in for the Q1 FY24 for the bank and the lender, they reported a healthy quarter with earnings growth of 30% on a year-on-year basis when you look at just in terms of the growth of the company. While overall the net interest income of the company that also saw a growth of around came in at around 25% uptick in terms of the NIIs of the company as well. So yes, keeping an eye out on that one. When you look at it in terms of the forecast for the NIMs, that is lower than what the street was expecting. So keeping an eye out on that one. Loan growth remained quite healthy at 20% for the company on a year-on-year basis. Headline gross NPL, that is a non-performing loans ratio, that was also quite stable. But that, like I mentioned, that slippages was a bit of a concern that came in over there, as well as the NIMs declining was the main factor that we're seeing a decline coming in for the stock price of DCB Bank as well.
All right, moving on then, Sameet, Bharat is another stock that is on the radar now. The stock is given an up move of 6%, 6.5% in the last 6 months. In the last 1 month, it has given more than 11.5%. So the stock is in an uptrend. Tell us, what is the chart penciling in for this particular counter?
Clearly, this stock is on a roll since last 3 trading sessions, ever since, it surpassed its hurdle of 860.65 on a closing basis. If you look at the volume activity, it has risen substantially, more than twice or thrice of its average daily volume. So that clearly suggests that there's a strong buying, interest in this particular counter, and it is now challenging its, recent multi-month highs that is around 900, 950. Stock has already surpassed it, and from here on, it is likely to enter an uncharted territory. So next levels to watch out for would be around 960, 980 for Bharat Forge, and any depth probably towards 920, 910 would be a good buying opportunity for Bharat Forge.
All right, moving on then, the next counter in focus is GAIL. Now, GAIL has hit a 5-year high, after UBS doubled and upgraded the stock to buy. Now, this UBS has doubled the upgrade, and they have upgraded the stock to buy from the sell rating, and it has raised the target price to 150 rupees per share from 80 rupees per share. Now, they say the company's transmission revenue could be between 11 to 19% higher than the consensus estimates, driven by higher realized tariffs. They also feel that they've added that the margins are improving on a year-to-date decline in FY 2024 in cost of gas used as fuel for transmission, and also it says that the company's transmission volumes could be boosted by softening of the LNG prices along with commissioning of major pipelines. And on the back of that, UBS has maintained a buy on GAIL, and on the back of that, the stock is up almost 3.4% in trade today.
Okay, surely keeping an eye out on that stock. GAIL, surely after that double upgrade that has come in, is flying away high in trade this afternoon as well. And Sameet, you two have picked out GAIL for us on the charts. What is your view? What is your target price? UBS saying 150. What are you saying?
I think 135, 138 clearly looks on charts. Stock has been giving decent moves off late, and we have been quite upbeat on this counter. If you see, from a slightly broader perspective, the stock is now trading at its multi-year highest level since 2019. So it has confirmed a decent price volume breakout now. So 135, 140, these are the next levels to watch out for. And you never know, if 140 is surpassed in probably next few months, then yes, 150, 155 levels would be on card. But as of now, stock looks quite robust. Any depth from current level would be a good buying opportunity.
Okay, keeping an eye out on those levels for GAIL over there. But let's move on and talk about Go Fashions. They came out with their numbers just a short while ago. When you look at it, the revenues of the company seeing a strong growth of around 15 to 16%. Operating performance has been quite strong for the company as well. Look at the EBITDA, that came in at 26 crores, which is an uptick of around, EBITDA came in at 64 crores versus 53 crores, which is an uptick of 21% on a year-on-year basis. Margins seeing an expansion of more than 150 basis points as well. EBITDA margins at 33.8% versus 32.2% last year. So healthy set of numbers seems like that has come in from Go Fashions, and you've seen that uptick coming in the stock as well, trading at almost the day's highest point as of now, 2.5% uptick over there.
All right, moving on then. Another stock that is in focus today is the Stovecraft. Vamakshi, tell us why is this stock in news today? Why is the stock buzzing in trade today?
Well, the stock is in focus on the back of its Q1 numbers. When we look at the revenue, that did see an uptick of almost 8.2% on a year-on-year basis, and this has come in despite muted demand. When we look at the EBITDA, it stands at 240 odd crores, an uptick of almost 11% is what we're seeing. Net profit has also rather stayed flat and seen a marginal uptick of almost 1.5%, standing at 82 odd crores. Not just that, the margins have also improved by nearly 19 basis points. We have also commentary that came in from the management, and they have highlighted that the first quarter result was largely in line with expectations, both in terms of revenue as well as in profitability. In fact, during the quarter, they have successfully added nearly 25 additional stores in South India, and 90% of their stores have achieved break-even in an average period time of almost 3 months post-opening. So all in all, the results are the reason why Stovecraft is in focus today. As of now, the stock is trading near the day's highest point, up nearly 5% as we speak.
Keeping an eye out on that one on the back of its numbers. But on the back of technicals, Hindalco is the stock that we're going to talk about next. And Sameet, what is it that the charts are indicating now for Hindalco? Would you say at the current price of 459, it's a buy call for you?
Yes, clearly, stock has been consolidating for nearly 3 to 4 months now, and it is now challenging those important hurdles of 455, 456. So on an intraday basis, stock has already surpassed it, and if we get a daily close beyond 456, then yes, the breakout is confirmed, and then the stock can head towards 475, 480 in the near term. If you see in the entire metal pack has been in the focus, this stock has been slightly a laggard. But now it is time for Hindalco to have some sort of catch-up move. Here on 160, a breakout beyond 160 would confirm the target of 475, 480 in the near term.
All right, moving on then. The next stock in focus is United Breweries that stays, in the red, almost down 2%. Shesha, tell us what are the quarter numbers saying for United Breweries and how has that impacted the stock?
Well, yes, it reported its numbers and largely in-line set of numbers. Volumes have impacted numbers this quarter on a year-on-year basis. Margins, meanwhile, on a sequential basis have improved significantly. Remember, in the previous quarter, company had reported EBITDA margins of just 3%. It has improved to 9.3% this quarter. Volumes, as I mentioned, were impacted on a year-on-year basis. This is on account of lower interstate sales and supply challenges that the company experienced in the quarter gone by. Management commentary, meanwhile, is okay. They say that inflationary pressures on raw materials are expected to soften in the near term. However, they are likely to remain volatile at least in the near to medium term. Apart from this, Heineken also revised its guidance for the full year downwards. Remember, Heineken holds stake in United Breweries. So on the back of both of these news pieces, this counter is in focus today. As you mentioned, it is down over 2% as we speak.
Okay, keeping an eye out on United Breweries, but let's move on, talk about NMDC and Sameet. What are the charts now indicating for NMDC? 6 months, it's seen almost a flip-floppy, nothing exciting there. 4% downtick is what we've seen in terms of returns. Now, what's your view?
See, as I just alluded to, the entire metal pack is in focus now, and NMDC is the one stock that has been clearly outshining the entire pack since morning. If you look at it from a slightly broader perspective, stock has confirmed a bullish breakout from its bullish cup and handle pattern around 114. If you look at the volume activity, it has risen substantially in last couple of weeks. So overall, considering the weekly time frame chart, we would expect this stock, having some good move in the near term. So 122 to 125, these are the next levels to watch out for in the near term. At current level or any dip towards 113 would make it a good risk to reward candidate, and one can keep a stop loss around 112 on a closing basis and go long at current level for a target of 120 to 125.
Okay, surely keeping an eye out on that one. But let's move on and talk about Lakshmi Organics. Couple of news flows actually that have come in here. First, let's talk about the numbers of the company. When you see the numbers of the company, yes, on a year-on-year basis, you're seeing a decline coming in for the company. Also, it's down by 3.1% in terms of the revenues, profits of the company, not doing anything exciting as well. Even in terms of the operating performance, that has been weak on a year-on-year basis as well. And when you look at the EBITDA, that's down 23%, and margins of the company, that has also seen a decline of almost around 300 basis points. point, and EBITDA margins have come in at 10.5%. Now, why has the stock run up suddenly? When you look at it in terms of the stock move that has come in, Lakshmi Organic suddenly saw a jump up in trade, and why is that so? When you look at it, there is some approval that is coming in terms of a setting up of the plant, and when you look at it, yes, what we're seeing is that they said in terms of they're setting up a manufacturing plant is what I'm understanding, and it is the board has approved setting up this manufacturing plant that is going to be in Gujarat. So on the back of this, we're keeping an eye out on that. They're going to be keeping a capital expenditure of around 710 crores for setting up this new plant in Dahej and Gujarat, and this is according to the exchange filing that they've done as well. The first phase consists of specialities such as some of these derivatives that they're looking at in terms of the products over there. So keeping an eye out on that one. Estimated output is going to be of around 1 lakh tons per annum and expected to come on stream in approximately 3 years. So on the back of this, we're seeing that Lakshmi Organic actually started buzzing in trade because of this news flow today.
All right, moving on then, Sameet. HDFC Life is another stock that is in focus today, but in the last 6 months it has given us an up move of 11.5%, but in the last 1 month it has been trading pretty flat. So what should an investor do? Should we add on to the positions, or should we hold on? What are the charts reading?
So it seems that stock has already rallied from the levels of 445 to 680, and then we are seeing some sort of consolidation in this counter. The kind of price action that we are witnessing today, stock is on the verge of a breakdown from its recent important support of 642. So once we see this breakdown happening, we could see some short-term profit booking in this counter. Then probably the stock can head towards 620 or even correct towards 605 level, where we can see a cluster of support. So at least in the near term, we could see some consolidation or a price-wise correction in this counter. So as a trader, one should stay away. In case if you're an aggressive trader, one can go short at current level, keep a stop loss around 660 and target would be around 620.
All right, we'll move on then, and the other counter in focus is Raymond. Now, Raymond shares, it rose as much as 2.3%, to 1,944 rupees since July 27th, and that came primarily on the back of the fact that they have launched a new real estate project near Mumbai, and the company said that its real estate division, Raymond Realty, has expanded its presence near Mumbai with the launch of the fourth project, offering a revenue potential of over 20 billion rupees. And on the back of that, Raymond Real Estate, Raymond stock will be in focus as of today, Winnie.
Okay, surely keeping an eye out on Raymond, but let's put the spotlight on IDFC First Bank, Vamakshi. This one is surely shining bright in trade, trading with gains of almost 4% as of now. What's the reason for this?
Well, Vinny, this stock is in focus on the back of its numbers. When we look at interest income, that saw now healthy uptick of almost 36% on a year-on-year basis. Fee and other income also grew by 49% on a year-on-year basis. Operating expenses, they're seeing an uptick of almost 37%, while the operating profit overall, the operating leverage seems to be kicking in, and that is the reason why operating profit is surging higher by almost 37%. The provisions have largely remained stable at 476 odd crores, but it is the net profit that has actually grown by 61% on a year-on-year basis. As a result, we're also seeing that the return on assets has improved on a sequential basis by nearly 3 basis points to 1.26%. Advances, we're seeing a healthy growth of almost 25%. Deposits are also up nearly 44%. Now, keep in mind that the CASA ratio, in fact, the CASA has actually grown by 3% on a sequential basis, and IDFC First is one of the very few banks that have actually managed to grow their CASA on a sequential basis. Asset quality has also improved. GNPA has improved from 2.51% to 2.17% on a sequential basis, while credit costs have remained at 1.16%. So all in all, it does look like a good set of numbers from IDFC First, and that is the reason why the stock is abuzz in the trading session today.
Right, and we'll move on to Sameet. IDFC First is clearly firing in all cylinders. The stock is up almost 50% in the last 6 months. Tell us, what is this chart reading for the counter?
Yes, clearly, if you see its performance year to date, then stock has already given whopping 48% return this year itself. Recently we saw some consolidation, but that is quite evident because previously stock has already rallied quite sharply from the levels of 50 towards 80. So recently we saw some consolidation, and again this upward trajectory has been resumed today. So as we speak, the stock is now trading in uncharted territory, and from here on, the 92 to 95, these are the next levels to watch out for. So the overall bias remains positive, but the low-hanging fruit is already gone. Those who have been holding this counter, they should certainly stay put. The revised stop loss now can be placed around 80 rupees and hold on for a target of 90 to 95 in the near term.
Okay, let's move on and Kotak Mahindra Bank, let's talk about that one. We have some clarifications that have come in terms of over the speculations over RBI scrutiny in terms of succession over there as well. Ankur, what is this clarification that has come in? What is the new update that we're getting in terms of Kotak Mahindra Bank?
Yes, as we reported here earlier, now the bank has officially denied that there has been no communication, formal or informal, from Reserve Bank of India to its board members or to bank regarding succession planning. The bank has categorically said that the regulator has not asked for paring down of stake in the insurance company as well. Remember, there were news reports that Reserve Bank of India has nudged the board members of the bank to appoint a member who is outside the bank for next MD and CEO position. And now bank is coming and clarifying that there is no communication which has been received from Reserve Bank of India on that front. The succession planning, as we learned through sources, is currently underway, and after the term of Uday Kotak, which is expiring in December 2023, the next MD and CEO is supposed to be chosen by the lender, but that process is still underway. As we understand, the search committee is likely to have finalized few names, and it will share with the regulator very soon. Since all this process is still 3 to 4 months away, we may see that in some time those names may appear. But for now, bank is coming and clarifying categorically that there is no communication, formal or informal, received from Reserve Bank of India on succession planning.
All right. Thank you so much, Ankur, for that clarification. But with that, it's time for us to slip into a short break. You don't go anywhere. After the break, we get you more stocks.